Here's a frequently asked question. How do you start a software company when you don't have any money? Let's start by saying that the average startup survival rate is around 10%. That's right, 90% of startups fail before they can even become self-sustaining. Why? Almost half of failed startups failed because they did not create a product that people actually needed. Some failed because they ran out of money, while others failed due to a poorly equipped team. While the statistics paint a bleak picture, you have knowledge on your side. Your startup has a fighting chance of survival if you know the biggest pitfalls to avoid and have a solid game plan in place to build, market, and sell an app that people want to use. So, where do you begin? Hello and welcome back to our channel for another exciting video. In this video, we'll go over a practical 7-step plan for launching a successful software company. Because this video is based on lean startup methodology, let's start with an overview of how winning startups think before diving into the step-by-step guide. Number 1. Shortlist essential features of an MVP. If you're creating a product to alleviate your own pain, you might be the best person to list its key features. However, assuming that others are experiencing the same pain and are looking for a solution, you can enlist early adopters to help refine the value proposition. Nailing down the features, collecting feedback, and validating the concept are all critical steps in ensuring your product roadmap is on track. Making informed decisions at this stage is critical to survival, given that 42% of failed startups failed due to a lack of product market fit. When creating an MVP, you must be extremely selective. Focus on providing the bare minimum of features that users require to achieve a goal or realize value. Your project management app requires attachment uploading more than custom emoji support. Number 2. Sell the MVP ahead of time. The Growth Hacker project's MVP's lead capture page, which funneled qualified companies into a concierge demo. One solution to the problem of running out of cash is to bring on paying customers as soon as possible. This gives customers a financial stake in the product's success. They'll be willing to co-develop the product in exchange for getting the features they want and are willing to pay for built. Sales equals confirmation. Finding out if people will pay for what you have or plan to build is a major turning point for any company. Number 3. Get talent with equity. Not technically savvy? No worries. If you have the right startup idea and equity offer, you'll be able to find an enthusiastic technical co-founder. You don't have to spend money on talent acquisition. Instead, use a platform like VentureStorm to connect with your ideal CTO or CEO. Although opinions differ, startups typically provide technical co-founders with 10 to 35% equity. This is because future funding will further dilute equity, so CEOs seeking investment may be hesitant to give away nearly half of their equity. Number 4. Attain customers. After you've validated the MVP and iterated based on user feedback, the next step is to release the product to a larger segment of your target market. You can meet all of the right user goals with all your right features, but if no one knows your product exists, a competitor will. It's a land grab in the world of SaaS. You must remove the oxygen from the room. Large-scale paid ad campaigns and well-oiled sales team are largely out of reach for startups without enterprise budgets. A lack of funds is undoubtedly a disadvantage, but it's not fatal. It simply means that you must be scrappy and do hard manual promotion that does not scale. This frequently entails discovering where your customers hang out online and participating in conversation. Number 5. Verify the numbers. By introducing new users into the product funnel, you gain insight into how well the app performs in the hands of real customers. Do they stick around or leave quickly? What changes are required? While signups are fantastic, they only tell a portion of the story. If you can't get users to use your product, you'll lose money and find it difficult to get funding. Here is a list of the most important metrics that every tech startup should track. Users who are active. Active users return to your product on a regular basis. They didn't just log in and leave, never to be seen again. They get real value from the product and are one of your most valuable assets. How to determine active users? Active users are typically analyzed over time. Your monthly active users, MAUs, are therefore those who have logged in within the last 30 days. Every app promotes a different frequency of usage. Twitter hopes to use the product on a daily basis because there is always something new to see and it earns money from ad impressions. Users may need to use Sumo less frequently because once you've deployed a pop-up form, you don't have to log in and adjust it every day. You'll need a free tool like Google Analytics or a paid, dedicated customer data platform like Amplitude or Mixpanel to calculate active users. User IDs and event tracking are used in the calculations. Number 6. Remain agile. The Agile Manifesto and the world of literature that surrounds it are always required reading for startups. It's great to collect metrics and crunch numbers, but at this scale, it's easy to get bogged down in data that may be less important than simply improving your product. It's time to make product, feature, and marketing iterations based on user feedback and reports on key metrics like retention and activation. This entails making decisions based on limited data and the opinions of a few devoted customers. It may feel like a leap of faith, but the old Facebook mantra of move fast and break things remains a valuable lesson for startups. As your product and team gain traction, you will need internal processes and structure to support that growth. That means, for many successful startups, we work in sprints, iterate on the product in 2-week increments, evaluating performance at the end of each sprint and holding open discussions about what went wrong and what went right. I'm taking the logging of user feedback seriously. User feedback is critical for startup success, but it's frequently mismanaged. Create specific tags in your support ticketing tool that describe the feature or aspect a user is discussing, or at the very least, keep a Google Sheet up to date with the most recent snippets of feedback. Killing features or campaigns that are ineffective. You can't afford to go in the wrong direction with your limited resources. Is the data indicating that a beta feature you're pushing hard isn't gaining traction? Number 7. Finance and scaling. Many startups make the mistake of believing that step 7 is actually step 1. Obtaining funding to scale a startup should come later in the process. Before implementing a large-scale go-to-market strategy, you must first establish product market fit, gain early adopters, and iterate quickly. Funding is appropriate for products that have some market traction. For the 99% of businesses that do not fit this profile, external capital can be a recipe for disaster. If you're in the invention stage, remember that necessity, not money, is the mother of invention. Dave Bailey, serial entrepreneur and venture capitalist. Scaling a young startup too soon can be detrimental. According to Boris Wirtz of Version 1 VCs, there is nothing wrong with scaling up things that serve many users for little cost, such as better server infrastructure or self-service acquisition, but scaling up things that burn through money without producing reliable results, such as large sales and marketing initiatives, is frequently a factor in failure. For these reasons, seek funding only after you have a validated MVP and list of active paying customers. This will set your company apart from the many others competing for investor capital. The statistics show that starting a software company is no easy task. There is bound to be a large margin for error with something as complex as software and as unpredictable as team chemistry. If you follow these steps, you'll have a battle-tested framework that successful startups like Dropbox, Uber, and Buffer have all used to build, validate, and market their products. The recap. Number 1. Specify what your MVP will be and won't be. List the features and consider the simplest way to solve one major user problem. Number 2. Sell your MVP ahead of time. To generate buzz and raise funds, use connections, crowdfunding, and smoke tests. Number 3. Provide equity to build a strong founding team. At the very least, tech startups require a CEO and a CTO. Find a co-founder with the right skills, energy, and vision by using talent sourcing websites. Number 4. Work hard to get your first few customers. Without user feedback, software can be built incorrectly, wasting resources and eventually killing the company. Your first few customers' money is important, but their feedback on what features to build next and why is priceless. Number 5. Examine your data and decide whether to pivot. Use customer analytics tools to record how users interact with your app, as well as to track retention and other success metrics. If something is broken, determine what it is and repair it. Number 6. Use Agile Methodology. As your team and product grow in size, it becomes too complicated to manage informally. Agile enables startups to build products in quantifiable sprints with short enough cycles to respond to customer feedback. Number 7. Secure funding and grow your team. You have a valid idea if you've made it this far. To make money and grow, simply double down on what works. This is what funding enables you to do. It's a long road, but considering how fraught with pitfalls it is, the fact that 10% of startups survive is a good thing, because with the right action plan, you'll position yourself ahead of the majority of other businesses trying to build the wrong software company. The video has come to an end. Please leave your feedback in the section below. Please share the video with your friends and family and subscribe to our channel for more great content and up-to-date information. Until next time.